Welcome to ROI, Rental Owner Interviews, where we interview owners, experts, and other folks that are involved in the rental owner industry. My name is Doug Tabor. I'm a CCIM, and I'm delighted to have our next interviewee ready for your learning and enjoyment. I do a lot of presenting with Mr. Bill Exeter of Exeter 1031 Exchange Services because he is the recognized expert when it comes to 1031 exchanges. I'm going to read his bio here, but you're really in for a treat. And I highly recommend that if you have any kind of questions with regards to a 1031 exchange, reach out to his company. They are trustworthy, they are qualified, and now that they have started a trust company, they are regulated from the banking industry. Bill Exeter is President and Chief Executive Officer of Exeter 1031 Exchange Services. He has been a senior executive in the exchange industry for close to 35 years now. Bill's company has administered in excess of, get this, 125,000 1031 exchange transactions. That makes someone an expert, in my opinion. And is a founding member of the industry trade group Federation of Exchange Accommodators. Bill is a local here in San Diego County, but his company is a nationwide company. He recently started a trust company out of the state of Wyoming, which is regulated, which means that Bill is certainly someone that you can trust with your 1031 exchange. So without further delay, let's get to the interview with Mr. Bill Exeter. I hope you enjoy it.
Yeah, thank you.
All right. Bill Exeter.
How are you?
I feel like I just saw you.
It was just a few days ago, and then we're here again doing this whole thing tomorrow.
You know, it's interesting. I was thinking about that when I was coming over here, is that you do these talks, and I know you do hundreds of them. You've probably done thousands of them.
I think we've lost count, but yeah, we've done a lot over the years.
You do these talks in front of groups, and the one person I think I've spoken with in front of groups the most is you. I didn't really think about that until on my way over here. I'm like, gosh, Bill and I, we've had all these conversations, just never one-on-one, really.
Yeah.
I think we've had one-on-one.
There's been a lot of good seminars over the years. It's been fun.
There has been a lot. And it's amazing to see that when you always capture the room, and it's because your content is so good.
It's a little technical. We have to kind of make sure we keep the technical part under control.
Yeah, you do a good job of explaining the technical difficulty. I mean, tax, that subject is not only difficult, it's dry.
Yeah, it is certainly a party kill. You bring that up in the party and like, whew, you just even gloss over and they're on to the next topic.
Right, except for when they're talking about deferring tax and saving money.
Yeah, if they're going to have to pay the tax, then it's a whole different ballgame.
Right, and that's probably why you're the most popular guy in the room when we have our talks, because we've had a few different workshops where we mentioned that you were going to be there, and everybody on their form says Bill Exeter was amazing.
We do our best, that's for sure.
Yes. So what's new in 1031 world? What's hot on the
there's a lot of I guess the market's shifting, and so we're trying to figure out what's shifting, where is it going. We're still in the seller's market. We're still, at least for us, we're seeing a lot of 1031 exchanges still. We've talked to some competitors who have said it's slowing down a little bit, but our volume is still there, still strong. May was our record month. So
wow. For the company as a whole?
For our entire company history.
Wow.
So it's been a fantastic year, and our pipeline still looks great. So I think it's still going to be a really good year. People are talking about going into a recession, and when is that? 1 year, 18 months, 24 months out? Who knows? But I think we got at least a year to maybe 18 months at least before it starts to maybe slow down a little bit, at least from what we've seen. I just don't see it sliding into a recession in the very near future. And it doesn't seem like it's going to be a deep recession either. I think it's going to be just kind of a mild and maybe a very soft landing. We'll just hope for that.
We can hope for it.
We can hope for it. Then, of course, the Tax Reform Act came out January 1st, and That eliminated exchanges of anything that's not real estate, or what we call personal property. So personal property exchanges no longer qualify. And we used to do exchanges of aircraft, shipping, trucking, vessels, machinery, livestock. We've done all sorts of weird exchanges over the years. And so now only real estate qualifies. Personal property has been taken off the board.
What would you say that the percentage of exchanges that you did prior that were personal property to real estate? Was it a big chunk of personal property? It was like an 80-20?
Not for us. Ours was a very small percentage of the business. I mean, it's less than 1/4%, so it's pretty tiny.
Oh, okay.
There's a few exchange companies that specialized and were basically 100% personal property. So they've obviously had a very big challenge in structuring who they are and what they are today. But for us, it didn't really affect us at all. It took a lot of the fun out of that segment because we did a lot of fun exchanges over the years. But
what was the most interesting exchange that you
the
saw?
Most interesting exchange, probably the most interesting exchange was, and this goes way back in the late 80s, was a 747. And outside tax counsel had recommended to the client that they do the exchange in international airspace. So we all got on the aircraft, and it hadn't been built out yet. It's still green on the outside, and they put in just enough seats for those of us doing the transaction and flew out to international airspace. And we closed the deal, did the wire transfer, and flew back. And they would not let me fly the plane. I tried. Can't imagine why.
So you had to do an international airspace. Does that mean the clients were there signing? Is that part of the exchange process where they have to be there on site signing, and it depends on where they sign?
It really depends. In our case, you never really need to be present. We don't have to be present, but in this case, they kind of structure it like in East Coast, what they call table closing. So everyone shows up at the table and does it. Right. So in this case, everybody was there and present, and I think behind the scenes, the attorney wanted to make sure everybody was out of the country and in international airspace when this thing got done. Their concern is the sales and use tax. Okay. So if it was out in international airspace, their opinion was that it would not generate sales and use tax for the state.
Interesting. For the state of California.
Yeah.
They haven't figured out a way to claw that back.
Not yet, although I'm sure they would certainly try. Wow. And then, of course, they look at where do you store or hangar the aircraft, and if it's 100% in California, I'm sure they'll find a way to get it.
Wow.
But fortunately, this goes so far back, it's long gone. And
it was a successful exchange?
It was successful, yeah.
Oh, cool.
It was a lot of fun. So.
How many exchanges have you done, truthfully?
We've stopped counting. The last time we counted, it was about 125,000 over the 35 years, so we've done quite a few.
125,000. We always talk about that in the workshops because it's an amazing number. And for any company, and I always say, if you want to trust somebody, have 125 transactions under their belt. That's about as much experience as you can get. Have you ever gone back? We were talking about markets before. Have you ever gone back and looked at cycles and maybe analyzed over the 125,000 what the company history, what the market cycles look like?
We've done a little bit of analysis. I mean, it's certainly, we're always kind of a leading, or I should say trailing indicator. So title companies, escrow companies would be more of a leading indicator. And they open the deal, and then we're always 2 to 3 months kind of delayed since we're more focused on the closing of the transaction.
That makes sense.
So we've kind of done that. It used to be that you could do a better job of forecasting what's coming, and after the recession, that has changed the ball game. And now trying to forecast is pretty tough. So now today, I think you have to be more nimble and be able to respond quickly to market cycles because they just change sometimes faster than you can keep up with them.
Is that what has changed the forecasting? Is it the market cycles are changing so quickly?
Market cycles are changing in terms of just the ups and downs and ebbs and flows. The months that used to be really good months are now maybe mediocre months or not so good months, and the months that used to be horrible now are actually mediocre months. I mean, so the whole thing has just kind of changed in terms of what our workflow used to be like.
I guess it does make sense that escrow companies and exchange companies would be a good indicator of what's going on in the market. Maybe we should talk to an escrow officer. But what I was going to ask is what months, and I get this question from a lot of buyers, when's a good time to buy or even when's a good time to sell? Do you know what months offhand are the most active in the marketplace?
Sure. Historically, December was always our best month for many reasons, and people would kind of be shocked by that because it's a tax-deferred transaction, so who cares? But in a lot of cases, people want it either off the books or on the books. They want to take advantage of depreciation, so December was always our best month. That's not necessarily the case now. December's kind of become a mediocre to better month. January, February, which used to be horrible months, have now kind of become more mediocre. So January, February, mediocre today, and then March, it'll start to pick up toward the end of March. And then really from the end of March to maybe first part of October are really the best months for 1031 exchanges, at least in our business. And then toward the end of October, we're going into November, December, holidays, et cetera. It starts to slow down. Unless there's a tax act, and then you get something where there's an impetus behind it and there's a reason to do whatever it is, and then you get a really active month.
Right, so the deadline is December 31st because the new law goes into place.
Absolutely, yeah.
That's, as a broker, it makes me think about how our activity works, but usually in the summertime it slows down. Are you saying that you're not getting a big slowdown in the summer? Or?
We usually don't. We usually have a pretty active summer. It's pretty busy for us.
Okay. So it makes sense if people slow down during the holiday season, everybody's fresh, they come out into January looking for those opportunities. It takes 90 days, seems like, to do anything.
Yeah, you got to ramp up and kind of get things together. Yeah.
By the time March hits, we're usually pretty busy. Especially after this last fourth quarter that we had, things really slowed down in the fourth quarter of 2018, which is, we're recording this in 2019. Did you see a big slowdown in 2018 fourth quarter?
We did. It was unusual because November started to slide like it usually does. December dipped more than we expected it to dip, so it was a pretty significant dip compared to what we had forecast. And January, same thing. January was lower than what we had thought. February is usually the same, kind of the same. But February actually popped up a little bit, and then March kind of tapered off a little bit. So it was kind of odd. But after that, it took off again, and we went right into May, which was our record month. So
wow,
it's been just choppy and kind of different.
Record month for a company that's done 125,000 exchanges. That's saying a lot, to have a record month most recently.
The toughest part is staffing, because you staff at a certain level, and if all of a sudden your transaction volume skyrockets, you can't call a temporary service and hire somebody for 30 days. So you just kind of hunker down and get it done.
Wow. I've been to your house on the weekends, and I know that the phone does not stop ringing.
The phone does not stop ringing. That is
and you
true.
Don't stop answering it.
That's true, too.
Bill answers it at all times.
Yep.
Which says a lot about your customer service here at the company, which we'll talk about in a second. But before we do, you had mentioned that one of the changes that has come about is the fact that you cannot exchange personal property. Mm-hmm. So you now are only dealing in real estate for qualifying for a 1031 exchange. What other changes have happened through maybe the recent tax bill changes that is something you think people should know about?
There's really no other changes that affect 1031 exchanges. They did come out with the opportunity zone funds. So there's been a lot of talk about whether an opportunity zone fund is an alternative to a 1031 exchange or a replacement, et cetera. And I think they're just different. So it depends on what's right for the client and what meets their goals and objectives. I think in most cases, if someone wants to stay in real estate, then the 1031 is better because you can keep deferring the tax indefinitely and do the old, as we talk, swap till you drop.
Right.
Keep exchanging till you pass on, and then get a full step up in cost basis. With the opportunity zones, you're selling an asset, you trigger the gain, and you only defer it until 2026 at this point, unless Congress does something. So you're really going to have a 7-year deferral, and then the tax man is going to come calling, but you have to hold it for at least 10 years to take advantage of the tax-free income. So there's that 3-year window where you're going to have the tax triggered, but you're not going to have the liquidity to pay the taxes with. So I think the qualified opportunity zone makes a lot of sense if you're selling stocks, bonds, mutual funds, a business, something like that. It could be a great backup strategy for a failed 1031 exchange where you can quickly reinvest and at least get another 7 years of deferral out of it.
Right.
There was some bonus depreciation, 100% write-off benefits that could help a lot of the personal property exchanges that we would have done. Now they just write them off and get a full tax deduction. So some of those changes as well. But other than that, there hasn't been a whole lot of change on the 1031 exchange side of things. Everything's pretty much stable. People would love to see the 45-day identification window go away, but that's still here. We have to suffer through that, unfortunately.
Yeah, that's one of the biggest concerns of the clients that I talk to is trying to get it through that 45-day period with up to 3 properties identified.
Especially in a market like today, I mean, it's a very fast market. People get multiple offers, get into bidding wars.
Right.
There's tight inventory.
Right.
So if you sell your property first and do a regular exchange, you've triggered your gain. You have to identify in 45 days, and if you can't, it's a failed exchange. It becomes taxable, and there's no way to go back and unring the bell, so to speak. So that's the risk, of course. They can always look at a reverse exchange where they can buy first. That takes a lot of the risk out of that transaction, but it's also a lot more complicated and expensive. So there's kind of a trade-off. But the 45 days is really the big issue. It's the most stressful part of it, and they have to really go in with proactive planning. And I think the key is really the client and their broker working together in advance and planning everything ready to go.
Proper prior planning prevents poor
If they
performance.
wait till they're in the 45 days and then call the broker, they're already behind the 8 ball, and it's a little stressful.
Yeah, that's definitely why I try to connect them with your company as soon as we start talking about listing the property, because they just need all of those items to be in line, because the clock ticks, and it ticks really quickly.
It does move by very quickly. It's amazing how many clients get caught off guard, and 44th day is coming up and it's panic mode.
Right, because you almost should be working with multiple brokers if you're really on a buying strategy. And as a broker, people probably think I'm crazy saying that, but you need to be covering a lot of bases, a lot of area. And if you're not with a broker that's very, very active looking at everything, then you may get caught off guard. Are you doing a lot of reverse exchanges? Because it seems like that is a great option. I know I have a client right now who's thinking of relocating a big chunk of equity, multiple millions of dollars to another state, and he's thinking about doing a reverse exchange just so he doesn't get caught up in the 45-day window. Does it make, it probably makes more sense for someone that's rolling over a multiple portfolio of millions of dollars, but does the cost, is it really that prohibitive for everybody to participate in one?
I don't think so. When I do personal exchanges, I would always do reverse exchanges. Even though they're more complicated, more expensive to do, it takes the risk out of it.
Personal meaning your own?
My own exchange.
For your own investment.
Because if I sell first, trigger the gain, and then for some reason I can't identify or can't acquire the property identified, then it's taxable.
Right.
With the reverse, it is more complicated, more expensive, but I go out and I have all the time to find what I want and acquire it and close on it and then sell. And of course, it depends on the market, but in today's market, it's a very fast market. So selling today's property or my relinquished property is going to be a lot easier than finding my replacement property.
Right.
But the cost is not really that prohibitive. But it depends on who you're talking to. Most exchanges on a regular exchange fee basis, on the West Coast, they're probably, say, $700 to $1,200 fees. On the East Coast, you might see them going up to almost $2,500. There's less competition. When you get into reverse exchanges, if you're working with somebody who really knows what they're doing, they're probably $6,000 to $9,000 in a base fee for reverses. The biggest reason for that is we have to hold title to one of the 2 properties, so our risk goes up. When you're holding title to property, inevitably you're going to get sued. So our risk is really legal fees and dealing with whatever happens. So anybody who really understands reverse exchanges knows what they're doing, knows what the exposure is, and their fees are going to be $6,000 to $9,000. And on really large transactions, it'll go up from there.
Got it. Hello, my name is Doug Tabor, CCIM. I specialize in the sale of apartment buildings and rental properties in San Diego County. Owners typically call me when they're tired of the tenants, toilets, trash, termites, toddlers, turnover, and telephone calls, the terrible T's of the rental housing business. Right now, it's a great time to consider putting your property on the market. There's lots of investors out there, interest rates are low, and there's a huge demand. So if you're ready to move on from the terrible T's and go to the terrific T's, which is travel and more time, please call me. I can be reached at my website, or you can call me on my direct line, which is 619-483-1031. You'll see it on the screen here. My website is down below in the description box. And I know you have lots of choices in this market, but a little bit about me. I'm a member of the San Diego County Rotary. I'm a former United States Marine. I am currently serving on the membership committee for the Southern California Rental Housing Association, and I'm on the board for the local chapter of the CCIM group, which is Certified Commercial Investment Member. My philosophy is service above self. So please, if you want a broker you can trust, give me a call. Now, back to the interview. Got it. Are there any other activities in the transaction that would prohibit the independent owner from jumping into a reverse exchange? Is it way more complicated for them, or does that $6,000 to $9,000 really just cover all of that for them?
It does cover all that, but it is more complicated. Probably the biggest issue is they haven't sold their current property, so the equity is trapped.
Right.
And they're going to buy the replacement property first, and if they don't have cash, then they have to finance it. And lenders are not terribly excited about the fact we're holding title, but the client's really the borrower. So if it's an all-cash purchase and they've got those resources, then it's complicated but easy, if that makes sense.
Right.
If they don't have the cash resources and they can't refinance another asset or borrow from their family or something like that, then it's going to be complicated. There's a way for us to take title to the property they're selling, but they have to come up with all the equity up front. So usually it's a liquidity challenge is the biggest issue for reverse 1031 exchanges. Which is why 97% of our volume is regular forward exchanges, 3% is reverses. It's a great tool, but there's a lot of hurdles you have to overcome.
Yeah, I guess the equity portion is the most obvious one. Can you take out a refinance on the downleg property, on the property that you're going to be disposing of?
You can. A lot of advisors recommend that you never refinance the relinquished property. Well, that's usually because taxpayers are going to refinance and pull cash out, and they're going to do something else. In this case, we just say refinance the relinquished property if you can. Lenders don't like doing a short-term loan, but if they can do a 2, 3, 4-month loan and make sure all of the money goes right into the purchase of the replacement property, so we can say it was reinvested, then it would certainly count.
Yeah.
In a lot of cases, it's going to probably be a hard money, private money lender. Insurance companies for larger transactions could be a good source of financing for that as well.
Yeah, I guess that's where I was thinking it would probably be private equity or private capital, but then you're going to incur more costs because of the loan fees. So.
It is, absolutely. The interest and the points, and it solves the problem, and they can do it very quickly generally, but you're going to pay for it.
The government just doesn't make it easy, do they?
They do not make it easy.
Is that why you look so young?
I don't know. Certainly lost a lot of hair. There's a direct correlation to hair loss and stress.
You've been doing this how many years, Bill?
This is actually my 35th year, so we got into it in the early 80s.
So 1031 exchanges came around in the tax code back in the 80s, or has it been there for a...
Well, that's a good question. It dates back to 1921 in the actual tax code. And, of course, it's gone through some iterations and what have you. But the IRS didn't actually issue the proposed regulations until 1990, and then issued the final regulations right after that. So the first almost 10 years of doing it, we didn't have really any guidance from the IRS. So you would just, in fact, the very beginning of the industry trade group, the Federation of Exchange Accommodators, was a group of accommodators that were getting together as a committee of the Escrow Institute. And so we just kind of sit around and compare notes, like, I don't know, how would you do it? I don't know, how did you do it? And kind of figure it out and develop best practices until the IRS finally issued the regulations.
Almost like legal cases, right?
Yeah, almost, yeah.
What works and analyzing the historical data.
And there wasn't a whole lot of, at that time, there wasn't a whole lot of court cases out there. So you had some you could rely upon, and you had the starker cases that came out of the 60s and early 70s, which really formed the foundation of what we are today. But until you have regulations, you don't know how the IRS is going to rule on it. So
I can always tell who I'm talking to on the other phone, on the end of the phone, when they call in and they say they want to do a starker exchange.
Yeah.
I know I'm talking to someone who's been
around
school. For a while.
It's an old school term, absolutely.
I used to say starker. What is that? I didn't know, but then I finally looked it up.
Yeah, it's a fun story. So
what prompted you to get into exchanges specifically? I think you had mentioned to me in the past you were on the escrow side of the business. Is that how you entered the business?
It was actually even before that. I was controller of a bank up in Glendale, and the chairman of the bank, chairman of the board, decided to start an exchange company. And his outside counsel said, "I don't think you should have the escrow subsidiary run it. We think that's an agency issue." Of course, we didn't know for sure because they had no guidance at that point. But their opinion was, do not have the escrow company run that. So he gave it to me. I had no idea what a 1031 exchange was. And coincidentally, just a few months after that, UCLA had like a 2 or 3 day extension program on 1031 exchanges. And it was taught by an attorney out of LA. And so I took that class. And fast forward 35 years, I actually teach that class for UCLA now.
Really?
That I went to 35 years ago. So it's been kind of a fun 360-degree turn there.
Did they give you an honorary degree?
They did not.
Oh. That would have been worth a couple
and I
$100,000.
still get lost on the campus every time.
So you, back then, what was different compared to what it is like now?
It certainly changed a lot. Back then we didn't have the regulations, so it would say you had to identify properties. You had to identify 3 properties, but people would call up and literally try to identify like the multiple listing service, the MLS Book, things like that. Back then, clients' attorneys would say you cannot have any of the interest at all, has to go to the exchange company, and interest rates back then were 16 to 18% on money market accounts. So as an exchange company, you didn't do a whole bunch of exchanges. The volume was pretty low. Most people still didn't know about them. But on a per transaction basis, it was a lot more profitable. Today, it's become, it's more of a commodity today where they just treat it as a processing service, basically. And so the profit margin is really tight on each individual transaction. When it really shouldn't be a commodity because each one it's so technical, you really need to dig in, review the documents, and it's not really a commodity, but it's viewed as a commodity.
Right. I have to imagine, you mentioned the MLS Book, so that's dating it back quite a ways. I haven't ever seen an MLS Book. We're generally spoiled in this generation of online digital MLS systems. What was the amount of paperwork you had to do by hand for a 1031 exchange back in the 80s and 90s? Was there
back in the 80s, it was pretty easy. I mean, we had an exchange agreement and an assignment of the purchase and sale agreement. That was pretty much it. And your disclosures and your hold harmless and indemnification language was really small. And assignments were 1 pages, and exchange agreements were pretty short, 10 pages, 12 pages. And of course, over the years that has grown and whatnot, so the paper's gotten a little out of control.
How many pages is it today?
Today it depends on the qualified intermediary you're talking to. Some overkill. So ours is probably 25 to 30 pages when it's all said and done. But I have seen some that are quite a bit more than that.
Wow. What would you say the difference is, Exeter 1031 exchange, between Exeter, your company, and other intermediaries out there? Or, I guess better phrased, how are you trying to be the leaders in the market at Exeter versus other intermediaries? Why should someone come to you guys?
Good question. A couple of things. Over the years, the one thing we've learned quickly is that clients call for help, and they'll call 3 or 4 or 5 companies, and they'll get 3 or 4 or 5 different answers. And then when we get to them or they call us, they'll say, I've talked to a bunch of people, and I'm getting different answers, and I'm so frustrated. I'm so confused. Can you help? And so we'll sit down and just say, the problem in our world is that there's a lot of gray areas. The tax codes, the regulations, the rulings, they leave a lot of questions unanswered, or they're very vague, or creates other questions. Mm-hmm. So we'll sit down and say, well, let's walk through your transaction. And what happens in a lot of cases is the answers they're given are not fact, they're opinions. Mm. And so that creates a lot of, this one said you got to hold the property for at least a year, and this person said 2 years, and what is it? And it's like, they're just opinions. So we walk them through the mystery, if you will. We have our whole slide shows unraveling the mystery of 1031 exchanges. And so we walk them through as to why that is. And so we really try to be more advisory and consultative. The best case scenario is you get on a conference call, you get the client's broker, the attorney, the CPA, and us, and then you walk through, and everybody has a little piece of the pie, and you end up with the best possible solution for the client. Where I think a lot of exchange companies are processors. They just process the paperwork. It's a commodity business now, and they just process. And then the client doesn't get the advice they deserve. And, we're not attorneys, we're not CPAs, we can't give advice, but we can say, here's the pros, and here's the cons, and here's the aggressive, and here's the conservative position, and here's what we've seen other clients do and other clients counsel advise. And then certainly we give them information as to what our perspective is, and then they and their advisors can make a decision. So I think they come out of it with a more clarity of why it's such a confusing world sometimes, and go from there. And the other area that we try to differentiate in, which is something we've been working on the last few years, is protecting the client. Our industry is not regulated. There's no way to get it licensed. It's not audited unless you're subject to that from a different reason, a different perspective. And we have, I'm one of the founders of the industry trade group, and we have gone to just about every state agency and federal agency you can imagine, and almost begged for them to audit and regulate and license our industry. And they've always come back and said, the loss ratio is just not big enough. It's not great enough, so we're not going to, it doesn't justify that. So we decided a number of years ago that to do it right, we had to make sure we were licensed, regulated, and audited. So we decided to become a trust company. So we spent the last few years going through the regulatory approval process, and we now got that done, and we got the charter a few months ago, actually about 4 months ago now. So that means we are one of the few exchange companies that has any kind of government oversight, and we're licensed and regulated and audited by the Wyoming Division of Banking as a trust company. So all of our funds now are held in separate, segregated, dual signature qualified trust accounts that are subject to audit by the government.
Is that what it comes down to, is trust company is the way that the accounts or the money is held?
That's exactly it, yeah. The Treasury regulations actually authorize either a qualified trust account or a qualified escrow account. Most exchange companies over the years haven't worried about it. A perfect example would be Land America Exchange, part of the Land America family. I mean, they were one of the top 5 title insurance and escrow companies in the country. They chose to invest their exchange funds in auction rate securities. Not a bad investment, but not prudent for exchange funds. When February 2008 came around and the auction market froze, they couldn't get their funds out.
Oh.
So clients' funds were frozen in the investments. It forced them into an involuntary Ponzi scheme. Hate to call it that, but it's involuntary. They had no choice, so they started putting corporate funds in to cover that, and eventually ran out of corporate funds, so they ended up filing for bankruptcy.
Wow.
And the judge ruled that the funds were corporate funds, not client funds, because of the way they're held. And the judge also ruled that if you had done it differently, if you had used the qualified trust accounts like the regulations allow, my ruling would have been different. So it's critical that, one, you have government oversight, and 2, they always want to have the funds held in a qualified trust account, because most of the time when something happens, it was not the intermediary's fault, it just happened. So right. Land America did not fail because they did anything wrong per se, just the recession kind of took them down. But the clients could have been protected if they were using qualified trust accounts. So that's why we decided we need government oversight, because that way if we've got somebody who's looking over our shoulder, checking our work, auditing what we're doing, our best practices and policies and procedures. And we're also holding in a trust. So if anything outside of our control ever takes us down, the clients are protected.
So is that the good question that a client should ask an intermediary that they're going to consider doing business with, is where do you hold my money?
Absolutely. Yep. Where do you hold it? How do you hold it? Is it a dual signature account? Dual signature means the intermediary has to sign off to release the funds, but also the client. So that way, like in our case, Exeter Trust Company cannot release the funds unless the client authorizes them to do so. Most qualified intermediaries have total control over the funds, and there's no client signature required. They should also ask about bonding. What type of fidelity bond, errors and omissions, insurance they have to protect them.
Wow. When I was when I was a loan officer in Henderson, Nevada back in 2005 or 6, I think I had told you this story one time. My first experience with an intermediary company was a company that was in an office below ours, just in the same office building. They were a company that ran away, I think, with like $300 million.
Yeah.
I don't know if you remember.
Southwest?
I think it might have been Southwest. I remember coming to work one day, and I would take the stairs and pass their suite, and there was FBI do not cross tape on their suite. There was a big notice, and then in the news they talked about a 1031 exchange company in Henderson, Nevada that essentially took all of the exchange funds and left the country.
Yeah, and it's unfortunate. There's been a few cases like that over the years, and I think that's one of the perfect examples of why you need government oversight, because if anything's being done that's not correct, in this case, a gentleman bought a number of exchange companies and aggregated them, and then was taking the funds to start another company he was working on. And, that happened over a period of time, and if there was government oversight, that would have been caught. So most of the failures in our industry could have been prevented if there was government oversight. And not all of them, but the vast majority, I think, would have been prevented if there was a government body looking over them and checking out their operation.
It's the kind of market right now, as a seller's market, where a lot of people are jumping in. I'm noticing new 1031 exchange intermediary companies starting to promote themselves. Is there something else an investor or someone looking for an intermediary, qualified intermediary should look for?
Oh, absolutely. I think you bring up a really good point, because at this point there's no licensing requirements, there's no regulatory requirements, as we talked about, and so really anybody can start an exchange company and roll out their red carpet and bring the clients in the door and start working. And there's been a number of them recently. And so I'd look at experience and length of time in the business, because if they've been in business just a year or two, then they haven't had time to make the mistakes and go through their growing pains and all of that. So that's a risk. And then online nowadays, you can get some really good information out there, just through rating agencies and reviews, Yelp and some other websites. Just go out there. And if there's either negatives, then you know what the negatives are. If there's absolutely no reviews, then it's like they're way too new. They haven't had time to be vetted by the clients in the industry yet.
Absolutely. So, Bill, wanted to ask you. You mentioned a few key things in the last topic. What are some of the maybe 2 or 3 key things that you think that our viewers or investors should know when considering an exchange? You mentioned one, which was, we talked about like-kind property. Mm-hmm. You mentioned a couple that were out there in the last sentence that were maybe out there and it was misinformation. What are maybe 2 or 3 of the top things that you see out there that are misinformation that people should really know?
Probably the one that gets the most confusion, and it's kind of related to what we talked about in terms of the holding period, is what they call qualified use. So the properties they're selling, the relinquished properties, and the properties they're buying, the replacement properties, all have to be held for rental, investment, or business use. And that term could be defined many different ways. Most investors say, well, I wouldn't buy real estate and do blah, blah, blah if I didn't consider it an investment. But that doesn't mean that it qualifies for 1031 exchange treatment. So that's where it gets a lot of misinformation. A lot of people will say, well, you don't qualify unless you've held it for at least a year or 2 years or what have you. And all of that is kind of a moot point. The real issue is that the client has to have the intent to hold for rental investment business use. So if they get audited, they have to prove intent. So if they held it for 1 day and they could prove they had the intent to hold, but maybe they just got an offer out of the blue the day after they closed that they couldn't turn down, that would be the reason. So they'd have to be able to demonstrate they really intended to hold it for rental investment purposes, but something's happened. So, and there's even court cases where the holding period was 10, 15, 20 years, and the intent was to buy and build and sell like a developer. So the intent in that case was not held for investment, it was held for sale. It's inventory in a developer's
considered
business.
Inventory.
So it really boils down to, if you're a flipper, a rehabber, a contractor, builder, developer, you're probably buying with the intent to do something to the property and then sell. So it's inventory and it doesn't count for exchange treatment. Although if they bought and did whatever they're going to do, rehab it or build it, and then they held it for rental purposes, it would qualify. Or if you're buy and hold, it certainly qualifies. You buy, you hold as rental or investment property, it works. If you buy and hold and you use it in your business, it works. So the length of time doesn't matter, it's the proof. What can you prove? What can you demonstrate that your intent was? And so that's a huge area we get a lot of questions on, where I thought it qualifies, and we have to go through that whole explanation. And a lot of exchange companies will just say you don't qualify because you didn't hold it for at least a year, and that doesn't matter. It's right. The intent that's critical. It still amazes me. There's a lot of misinformation out there on a like-kind property, and in fact, the more you talk to people in areas that haven't done a lot of exchanges, they still think if you sell a condo, you have to buy a condo. If you sell an apartment, you have to buy apartments. There's still curriculum out there that tells you that. There's still classes that people put on that they'll say that. And like-kind literally means you're selling real estate, you have to buy real estate. So it doesn't matter what kind of property it is, as long as it's defined as real estate, it would count as for 1031 exchange purposes. So all we really focus on is, did you have qualified use? Could you demonstrate that? That's really the key issue. And those are the two areas that probably get the most misinformation out there.
So intent is an investment, and then real estate. So essentially investment real estate.
Exactly.
It has to be considered cash flow investment real estate.
There's a lot of technical requirements, but those are fairly straightforward as you go through it, identification and exchange periods and all of that. But making sure you qualify is really the key, and that's where there's a lot of confusion.
You wrote a little pamphlet, a book, and we have it right here. I'm not sure if it's in the shot. Let me pull it up. But this book is fantastic, and we're going to make a link available below in the comment section. It's a guide to 1031 exchanges. It answers everything you probably want to know about 1031 exchanges in a pretty easy-to-go guide, and we do have the digital version, or they could reach out to us and we can get them a version of the hard copy, or they can attend one of our workshops.
Absolutely. Yep.
So we're hosting these workshops
and for free.
Yeah, every couple months we're hosting these workshops with Aubrey Morrow from Money Talk Radio, and trying to give information that's helpful to investors, and they've been pretty successful. We have one tomorrow. We currently have about 35 people registered.
It's going to be fun too.
Yeah. We intentionally keep them small and intimate, so we'll have tomorrow 35, and then we have about another 25 people on Saturday.
Super.
Yes.
And it's really a great way for investors to get education so they can make better informed decisions, and that's what I think we're all about. If we want to make sure they've got the right information and make the right decisions, and if we can pull that off, they will always come back and work with the three of us.
Absolutely. And it's strictly informational. We're not pitching anything at the back of other than really good free coffee.
That's right.
I'm always trying to give away my free coffee.
The Marine Corps coffee.
The Marine Corps coffee, yes. I thought we would touch briefly on your other services with the trust company. I think you had mentioned to me that when you opened up the trust company, that allows you to provide additional services. Are there any that you want to mention?
Sure. One of the risks we thought we had in our operation is we were 100% 1031 exchanges, and during a recession, the 1031 exchange volume can drop, especially during this last one in '08. The volume dropped a lot. So we decided it would be prudent to diversify the product mix. So the trust company was really rolled out to handle the 1031 exchanges, provide the qualified trust accounts for the exchanges, and to provide the government oversight that's critical. But it also gave us the opportunity to roll out other products. So we're going to be rolling out custody services, which is simply just a way where we can hold title to assets for clients. And our focus really is investment advisors, real estate brokers, registered investment agents that have clients who want to invest not just in stocks and bonds and mutual funds, but also real estate and real estate related assets, and really any kind of asset that's not traded on a public stock exchange, or what we call alternative investments. And most custodians can only handle publicly traded assets. We'll handle both. The same goes for self-directed IRAs. In self-directed IRAs, you can buy non-traded assets or alternative assets like real estate inside the IRA. So that's our specialty, is holding those type of alternative investments, and we'll roll that out as well. So that'll be really our next two products, is custody services and self-directed IRAs. And then kind of an ancillary product is what we call specialized escrows or specialized holding escrows. We don't want to compete with any of the escrow companies because they refer us quite a bit of business. But in a lot of cases where a transaction closes, there's some kind of a cash holdback requirement. And the escrow companies or escrow departments won't handle it because there's no real estate involved, there's no recorded deed, there's no title insurance, etc. Their regulators come down on them for doing it since there's no real estate transaction. So we can handle those type of specialized escrows that the escrow industry doesn't want or can't handle because of the regulatory environment.
Got it, like an escrow holdback for making a repair to the property.
Exactly.
Effect. Interesting. Well, we'll have to do another podcast in the future once you get 100,000 of those transactions under your belt.
Phew.
Before we ask our final question, what's the best way for folks that are interested in contacting your company to get a hold of you?
They can certainly go to the website. It's Exeter1031.com, and there's lots of articles and stuff out there. If you have a hard time sleeping, that might be a good place to go. All the contact information is out there. They can call the office, so it's area code 619-239-3091, or they can email direct at wexeter@exeterco.com.
Got it. Perfect. All right, my final question, and then I know you have to get home because not only are you running this empire of 1031 exchange companies, you have a beautiful, lovely wife and a beautiful new baby girl, Jasmine.
I do. 7 months old now, and
wow,
it's amazing how fast time flies.
How much coffee do you drink on a daily basis?
A lot.
Yeah, so do
Way
I.
more than my doctor would like me to drink, I think.
Well, these days coffee's getting a good rap. So, final question, and this one I think is really important. What keeps you going? What do you love about this business?
That's a good question. It's funny because sometimes you get into an industry and it just gets in your blood, and it's fun. So I think in this case, I'm an accountant by background, and so I like numbers, I like finance, so it's all of that. I like technical stuff. I like the challenge of reading through and understanding the technical stuff. It's got all of that, but I really like helping people and working with people too. So it just has all of that built into it. You're helping people, it's technical, you help them understand it, get through it all. So it just feels right. It's a good fit.
Absolutely. Serving people. I send all of my clients to Exeter 1031 Exchange Services because I feel that I can trust them, and that's really what it comes down to. So if you are interested in getting more information, reach out to either myself or go straight to their website, contact Exeter 1031 Exchange. They're a great company. And the biggest thing is the service of the client. Whenever I send a client over to Bill Exeter's company, I know that I can sleep at night because they're going to be there. They're going to be serving that client. They're going to be answering questions for folks because it could be stressful for individuals. It's money, and it's their sometimes it's their life savings and their number one investment. So they need to go with a company that they can trust, that's qualified.
Absolutely.
That's qualified. All right, Bill Exeter.
Thank you so much.
We finally did it.
We did.
Thanks for coming on, and
My pleasure.
Appreciate you, and I look forward to doing more business with you in the future.
Perfect, and I'll see you at the seminar tomorrow.
Yeah, I'll see you tomorrow and Saturday. I saw you last Saturday. It's good. It's all good. All right.
Perfect.
Thanks, everybody.